Hi, everyone. Welcome to episode 27 of Takeaways. My name is Patrick Searcy. I'm Director of Marketing for ALN Apartment Data, and I am joined by the actual star of the show here, Jordan Brooks, Senior Market Analyst. Jordan, how are you?
I'm doing great, Patrick. How are you?
I'm doing very well. Thank you so much for joining us today. We're talking about the article from the October newsletter, and it's called Q3 Brought an End to Coasting on 2021 Multifamily Demand. Well, before we jump into this too deep, you mentioned, quote, the relationship between 2021 multifamily results and what we saw in the first half of 2022 a few times in passing during that article. Can you elaborate on that for a little bit?
Well, I think there's probably two main things to keep in mind when we're talking about sort of the impact that last year had on what we've seen so far this year. One is just, of course, the historic level of demand that we saw last year drove not only last year's results, but those sort of tremors were still being felt this year. And one of those main ways was that despite apartment demand being pretty lackluster all of 2022, we brought such a high average occupancy into the year, and that was able to persist through at least where we've been so far this year, even on the back of poor demand. That was sort of a something that was buoying rent growth, even probably past the level that would have been expected given what we were seeing on the demand side. So those occupancies that were so high coming into the year kind of added fuel to the run of the rent growth that we saw, and that really has just dissipated in the last couple of months. And then another one just quickly would be that the rent growth momentum that we carried into the year also sort of set up the baseline for this year at a higher level than obviously it typically would be. And we've seen sort of a return to a seasonal pattern this year in the rent growth, but the overall level of growth has still been higher, obviously, on a monthly basis.
Hey, you just mentioned that apartment demand has been pretty poor all year, and in the article you detail, what looked like, what that looked like for the third quarter, I should say. Looking below the national numbers, what are some of the major stories that you can give us some idea of what's going on?
Well, one, I think, is we've seen sort of a dichotomy at the price class level with the class A properties, the class B properties, higher rent properties. Their demand has been down this year and was also down in the third quarter relative both to last year and to sort of a recent historical average over the last few years. But more substantially down was the net absorption in the Class C and the Class D spaces, the workforce housing segment, to the point where in the third quarter, net absorption for both of those was actually negative at the national level, meaning that we had fewer leased units at the end of the quarter than we had at the beginning for those price classes. So that's kind of I think a main storyline below the national numbers, partially because a lot of the analysis we've seen in the industry has kind of been dubious of the idea that we're seeing affordability pressure apartment demand. And I think our take is maybe a little bit different. I think that when we look at the price class demand numbers, we do see affordability pressuring demand. And I think one of the data points in support of that idea is that we're seeing household consolidation. We're actually shedding net leased units in the workforce housing segment. Whereas in the Class A space and in the lease up space, yes, demand is down compared to last year, but that's where it's been most resilient. And also, I think some of the markets that performed best last year, particularly some of the growth markets and some of the Sunbelt markets, we've seen those areas come back to earth sooner this year than some of the markets that kind of joined the recovery party later last year. So if you look at, Tampa, Austin, Phoenix, those type of markets, they show up near the top of the list when we look at, which markets have the largest shortfall of absorbed units this year. But also you do get some gateway markets like San Francisco and New York in there just because of the sheer size of those markets, obviously.
Well, rent growth momentum finally gave out in Q3. What's rent growth looked like in recent months? A little more granularly.
So I mentioned, we have seen rent growth kind of conform to a more seasonal pattern this year, although it has remained at a higher level than we're used to seeing. Rent growth through the third quarter nationally on a year-to-date basis was over 8%. So it has remained elevated, again, even sort of separated from the demand trend. But in the last few months, we would really have seen a fairly substantial trajectory change there. In the third quarter, rent growth was the lowest for any quarter going back to 2020 that we'd seen. And just within the last couple of months, September being an example, just the last full month of data that we have, average effective rent growth nationally, we had it at about 0.2%. So over the last 3 to 4 months, we've been trending down toward basically flat rent change.
We talked about the multifamily side of things here today. But I know that in other articles that you write for our blog and other places and in some of your speaking engagements, you also have been looking at the economic picture. So what would be a reasonable big picture expectation for fourth quarter for multifamily?
Well, in the big picture sort of macro view, multifamily fundamentals remain strong. But I think in the short term, given some of the growing economic headwinds that we're facing, given what we've seen over the last 18 months in terms of the rent growth, and given what we've seen over the last 12 months in the apartment demand trend, I do think we're in for a little bit of a rocky winter at least. There's not a whole lot of reason to think that we're going to have a big macroeconomic turnaround in the fourth quarter, especially given that for multifamily, the fourth quarter tends to be the softest portion of the calendar, just from a seasonal perspective. And given the fact that we were already in negative net absorption territory nationally in the third quarter, it's likely we're going to be there again in the fourth quarter. And also given what we've seen in recent months on the rent front, we're really looking at negative net absorption in the fourth quarter, a further erosion of average occupancy, and average effective rent growth that's either flat or probably slightly negative by less than 0.5% would maybe be my guess. But it's going to be a little bit rough, I think, in the winter, given the context of what we've kind of grown accustomed to, certainly in a historic 2021. And then as we get into next year, we're expecting the new construction pipeline to ramp up again and probably output more new units than we're going to end up with this year. And so, that's also going to bring its own pressures next year on occupancies. But certainly over the next 3 to 6 months, I think, until we can get to the spring, which is usually a strong portion of the calendar for multifamily, I think we're going to see kind of the trends that have been in place continue. So again, kind of a continued softening of occupancy, a continuing slowdown of rent growth. And then we'll poke our heads out in spring and kind of see where we're at and hopefully get that seasonal bounce.
Where in the world is Jordan Brooks going in the next couple of months here?
Man, things are really slowing down for the holiday season.
Are they really?
I think I'm going to finally enjoy being at my house that I moved into almost a year ago and feel like I haven't really been at. So, so I've got a virtual presentation that we're doing jointly with Resman, a great friend of ours at ALN. That I think is going to be probably before this video goes out, though. That's going to be October 27th this week. After that, unless something comes up, I don't have any speaking engagements planned until January. So I'll be focusing a lot more time on our blog and trying to put out some additional content, across our social media channels as well. So be on the lookout for both of those.
You can be on the lookout at alndata.com/blog. We do announce a lot of that on our social media, so you can follow us on Twitter at ALN APT Data. You can follow us, find us on Facebook and on LinkedIn. Just search for ALN Apartment Data. Don't forget to like and subscribe. Hit that notification bell. It just popped up. So that way you don't miss any of our new content here on YouTube or on our blog. So Jordan, thanks so much for taking this time today to chat with us about this awesome article. And we'll talk next month.
Absolutely. Yeah. See you next month. Happy Halloween.
Happy Halloween.